There's something that separates the profitable traders from the non-profitable traders, especially when the non-profitable traders actually know how to trade. They know the things to do to be profitable, but there's something stopping them from being profitable. If you ask an average trader how to trade, they will tell you everything you need to do to be profitable. They know everything. That's why many people out there have a course, and some of their students are successful, but majority of them are not. Almost everyone knows what to do when this happens in regards to technical analysis. Everyone has a strategy, but not majority of them are not really profitable. So there's a bridge between where they are and where they want to be, and that's discipline and emotion management. That's the bridge between where they are and where they want to be. And until you get across that bridge, you're gonna be experiencing a long cycle of almost making it, going back to square one, almost making it, going back to square one, because you're unable to get across that bridge. And I've seen a lot of people spend years trying to get across that bridge, and it doesn't work. Now, because your emotions get in the way, your psychology get in the way. And in this video, hopefully I can share with you guys what you need to do to get across that bridge. I'm still getting across it. I'm not totally across it yet, so I'm still trying. So this video is definitely gonna help me out if I'm to play it and watch it for myself, because we all know what to do. That's the truth. That's the secret out there. We all know what to do to be profitable, but we don't. Why? Our emotions get in the way. We do things that we don't realize we're doing until we've done it, until the damage is done. So in this video, I want to share with you guys the things you can actually do to be profitable. Number one is the best thing a trader can do after entering a trade is getting a life. Like, don't watch your trade as it's performing, because as you're watching your trade, you will feel the need to do something, especially if your trade is going against you. Chances are you're gonna keep dragging your stop loss and making it wider and wider and wider because of something called ego. If you have something called ego with trading, the market is gonna humble you, because the market is a market, guys. We can never know what's gonna happen in the market, so it's like a probability game. If you're gonna lose the trade, take the loss and move on from the loss. But it's very hard for people to accept losing, because in a general world, when you lose an argument, when you lose something, naturally you feel defeated and you feel the need to get back, to get that person back. And that's what people do when it comes to trading. They want to show the market that they know what they're doing, or they were right. But there's no such thing as being right. It's either you're on the wrong side of the market at that time, or you are at the right side of the market. So if you are in the wrong side of the market, you need to accept that and wait for another opportunity to be on the right side of the market. The market is going to be there for more decades, so there's no need to trade as if you have to retire tomorrow. Which brings me to my next point, which is overtrading or over leveraging. The overtrading thing can happen when you're having a losing streak. You feel you need to enter more trades to recover the previous trade, or you want to over leverage. But the thing is, the moment you break one rule, let's say you have 5 rules written down for yourself, rules you have to follow every day. If you break one rule, there's a very high chance you're going to continue to break more rules. So how do you avoid getting to that extent? Don't break the first rule. And one of the way you can do this, for me personally, when I wake up in the morning, I try as much as possible not to check my trades, especially if I enter a trade before I sleep. Because checking my trades means I'm giving the market the room or the chance to determine if I'm gonna be happy for that day or sad for that day. That's what happens when I check a trade the minute I wake up. Because if I'm having a winning trade, that means I'm gonna be happy for that day. And if I'm having a losing trade, I'm already giving the market the opportunity to set my mood for that day. So if you wake up to a losing trade, automatically you're sad, and right there where you are, you probably want a revenge trade, because you've developed the habits over time, and what you really practice becomes permanent in your life. So before you know, you've entered a new trade when you are not even fully awake yet. So that has happened to me for so long, and I'm done doing that. That's not profitable. And the earlier you realize what's not working, the earlier you can cut it off, the better for you. And the further you can go, and the quicker you can get to where you want to get to. And one other thing I want to talk about is when you're too exposed, when you know yourself, only no one knows you better than you. If you're too exposed to many opinions, many people's strategy, there are many people out there that will make themselves look like they know what they're doing, that they will be so confident when they tell you something is going to go up. Whenever you come across those kind of people, just run the opposite direction, because they are not market makers. Market maker, if you look at their name, look at their ID card. If it's not market maker, their first name is not market and their last name is not maker, they don't know what they're talking about. No one knows what's going to happen. No matter how confident they are, nobody knows what's going to happen. So when you're coming across those people and you want to make a decision because of what someone says, you shouldn't be doing that. You should trust your own analysis. And the reason why we actually fall into this trap is because we don't trust our own analysis. So if you don't have an analysis or strategy that you trust yet, you might want to take some time off to develop one. Backtest your strategy, and know how often it wins, know how often it loses, know how many potential losses you can have in a row. Because sometimes when people don't know the potential losses they can have in a row, they get discouraged when they're having something called losing streak. They lose 3-4 trades in a row, but because they've never back tested the strategy, they think, oh my god, this is bad, and they start to revenge trade, not knowing that's probably all the trades you will lose in a row for that specific period, not knowing your next trade might be a winning trade. But because of that, you're already clouded with what's going on, so you just revenge trading outside of your strategy and losing more position, and before you know it, you've blown your account. So trust your analysis. Don't trust anyone else. If you're too exposed to many people, I've seen some people with 10 different, they are in 10 different Telegram groups, getting signals from this person, that person, paying for that signal. Let me tell you, that's not going to make you any money. You're too exposed to lots of things, and that's only going to ruin you. I've seen many people that have been depressed because of forex trading, and I've been close to that point, but I'm glad that I just refuse to fall into depression because of something that that I can fix myself, or I should have fixed from a long time ago. So the earlier you can fix this, the better it is for you. And stop looking for the secret strategy to be a profitable trader, because there's no secret. I think any strategy can be a winning strategy if you apply it correctly and you apply the proper risk management and psychology to it. Many people want to trade every day. You don't have to trade every day, especially if you're a day trader. Oh, but I'm a day trader. That's what it means to be a day trader. You trade every day. No, if you are seeing your setups, let's say you have your own strategy and you are seeing your setup every single day in the market, then that's probably not a winning strategy. If you have a winning strategy, you probably won't see it every day in the market, maybe 2-3 times a week. That's when you see your strategy actually playing out for you to enter the trade. So if you're entering 5 trades a day, that's just to me, that's my opinion. I could be wrong to you, but because I'm wrong to you doesn't mean I'm wrong to me. It's whatever works for me. So this is just what works for me, and if you find it useful, apply it. If you don't find it useful, you can fast forward. Not trying to be rude by that, but forgive me if I offend you. So what works for you is all that matters. And if you're personally, I think if you are taking 5-10 trades in a day, that's too much for a day trader. If you're a scalper, that's okay. If you're scalping, blah blah blah. I don't even know how people scalp. Nothing gives me heart attack when I used to scalp. It's just too much for my heart. Like I can literally feel my heart palpitating like when I'm doing that stuff. So scalping is not for me. Which brings me to my next point. Know what works for you. If something doesn't work for you, move on to what works for you. Move on to what fits and suits your personality. If you're a full-time worker, you work 9 to 5, you might want to trade during Asia session, especially depending on where you're located. If you get home at 5 p.m. and you live in the US or Canada, you might want to only trade during Asia session. or you want to wake up early and trade during the London session. So whatever works for you in your schedule, you want to do that. So the last point I want to leave you guys with is conscious control. There are 4 stages every trader goes to. This applies to everything in life actually. The first step is the first stage is the unconsciously incompetent phase, where you think you know what you're doing, but literally you're just being delusional. You don't know what you're doing. And then you move to the next phase, which is the consciously incompetent. This is when you realize I actually suck, and you begin to get the help you need. And the next phase is the consciously competent, where every time you make a decision, you have to do it consciously for it to be right. So this is the phase where I think traders should remain in, because if they move to the next phase, which is the unconsciously competent, this is good for every other area in your life, but not day trading. If you're in the unconsciously competent phase, it means you are not consciously making your decisions. And every decision you make in forex has to be done consciously. You have to be aware of what you're doing, how many lot sizes you're using, your risk management, and all that stuff. Everything has to be done consciously. But if you're not, well, I can't understand what the last phase meaning you don't have to put in much stress, much work to actually get it done. But I think remaining in the third area, conscious control, is what I'm trying to get to. Being consciously aware of what you're doing before you do it, and being consciously aware of the consequences of what you're about to do is before you do it is very, very important. So you want to make sure you know the end result of what you're going to do. You can know how much you can potentially lose from a trade, and have your own maximum daily loss. If you exceed your maximum daily loss, there's no reason to remain in the market. It doesn't matter if you see another opportunity. It doesn't matter if you missed out on something. The fear of missing out can actually be your downfall. You don't want to have that fear. You want to overcome it. And I wish you guys the best. This is a very long topic. I can make 10 videos about this. But with these little things I've talked about, I really hope they help you guys with your trading career, and they can move you guys to the next level. I'm gonna watch this video myself and try to learn 1 or 2 things from it, because we all do know what to do, but it's hard to do it. And the earlier you start practicing it, the more it becomes, or the quicker it can be permanent. Because if you've been doing the wrong thing for a long period of time, it becomes permanent. You've conditioned yourself to be doing it. So it's hard to say. So you can say tomorrow I'm going to change, and tomorrow comes, you don't change. That's because you've already conditioned yourself to making mistakes. So you kind of have to uncondition yourself from making those mistakes, and recondition yourself to making the right choices, so that you can become conditioned to the right choices, and it can become natural to you. You want things to be natural to you. Doing the right things, you want it to be natural. There's so much things to talk about regarding this psychology thing, and unfortunately many traders ignore it. I think psychology makes up 80% of your trading lifestyle. Your psychology is so important. If you don't apply correctly, you won't be profitable. So I hope I've helped you guys with this video. So subscribe to my channel, comment and like. I'll see you guys in my next video.